There is nowhere to run and there is nowhere to hide. What's up, everybody? Welcome aboard to Bubba's Bottom Line, and of course, our last bottom line before Christmas. And of course, tomorrow is Christmas Eve, and basically, what have we seen? We've almost seen the markets that we have talked about and have been looking for an extended period of time. And again, I don't think it should be any surprise. And as I opened up with, there is nowhere to run, there is nowhere to hide. This market looks to get a heck of a lot worse, and for very many reasons. Which, number one, we have the debt cycle, which again, you cannot ignore the amount of debt that we have between auto loans, student debt, margin debt, credit card debt, government debt. Those things just don't disappear magically. Okay, unfortunately, we don't have the luxury of owning the Fed, the private corporation, that will bail us out. And of course, if you don't think that the banks aren't going to need another bailout here pretty soon, I would say, and I will stand by my opinion, which is the banks are over leveraged once again. We may not see it right now, but of course, you can bet your you know what that they are indeed once again over leveraged, knowing that the Federal Reserve will be there to bail them out. The guys who have no clue and have no understanding of what common sense or what street smarts or what actual markets are about. And I think this is always going to be continued to be a problem, which is why the Fed is basically a joke. In the meantime, we did have the Fed come out on Wednesday and hike rates, and not a surprise, and they should be hiking rates. Again, if we're going to continue to believe, and I have no reason not to believe, that the economy is better, which it appears that it is, and that there is a big demand for jobs, okay, to be an employer because there's not enough people out there, then I would think that you're going to continue to see this happen. Now, again, unemployment rates are at unbelievable lows. Wages have risen through the free market system, one of the two free market systems that we have. So this house of cards that has been built by the free money Fed over the last 10 years, okay, is starting to collapse. And again, let's be clear that long term, I am a believer in the market. Long term, we're going to go up, I believe, 8% year over year, just not every year. But we have now reached a certain peak that there is no longer support here. We are not going to have great earnings next quarter. I don't care what anybody says. I don't care about the metrics that we continue to hear about, okay? They don't mean, when the markets decide to go down, there is no place to run, there is no place to hide. And we can listen with all of our hope, which is basically what you've got going on right now, is the hope that this is just a temporary sell-off. And I would say, as we have said from the beginning, okay, that there is a huge correction coming. And not only, I don't even think we are close to the bottom, I think that it's, as the carpenter's saying, we've only just begun. Okay, so I think there's a dramatic haircut coming to this market. Now, that does not mean that there won't be huge, vicious, dead cat bounce rallies. We thought there would be one coming Thursday or Friday. Okay, we actually came out with early updates saying that we expected that there was an opportunity that you could see a spin around. And of course, they never showed. They tried on both days. There was an attempt to get a big rally, but on both days, that big rally was met with much heavier selling. Now, we just finished the triple witching cycle. Tomorrow, Christmas Eve, is going to be a short day. I would be a little bit concerned of how the markets are going to open tomorrow. Now, again, it's hard to say, but based on the last week's action, if we get a big bounce overnight or into the morning, okay, I would think you'd want to be a huge seller of that big bounce, because I think what you need to see is a little bit of a flush out in the morning and not an attempt to rally before we will see something happen here. But what we're going to see, I think, without question, is a lot of vicious dead cat bounce rallies. Now, one of the things that you look for in markets in general, and I think this is very indicative on Friday, is the VIX. If you continue to watch the VIX, if we go back to 2008, the VIX actually peaked in November, although the market didn't tank and have its final blow off until March. So the VIX is now getting over 30. It's something to watch. Friday, it was actually down on the day when the markets were down. It looked like we were going to rally, and of course, the VIX just took off. So I think that is something that we have to look at. Now, again, many are going to be concerned about the shutdown, okay? And, this could be a long one, and I don't think that we should be concerned about a shutdown. First of all, that means we're not spending as much money. I think that in this particular case, I had wished President Trump would have shut the government down before he signed the omnibus bill, whatever it was, 6 months ago, okay? But now I'm hoping they say shut down. They don't do us any good anyway, so why would I want them to be open? I mean, if you ever listen to these people speak, they're not speaking for the average middle class American. Okay, and it's about time that we don't have a making some bad deal. Now let's see what happens when it's all said and done. But I do not believe that the shutdown will have any dramatic effect on the markets. In fact, if we go back even to the fiscal cliffs and the last major shutdown of a few years ago, it had an initial sell-off, but after that it was basically nothing changed. So again, I say to you that when I look at the potential of a shutdown, to me, it is no big deal. In fact, I welcome it, okay? And let the congressmen and the senators work for a living and do something that isn't the easy way out, that simply helps them to line their own pockets, okay? Now, it's fine. It's something I find interesting is, as a trader, we love and embrace volatile markets. Okay, why is volatility so good for markets, for traders? Because volatility is what we would call the great forgiver in general. Volatility gives you an opportunity, so when you make a bad trade, which you will, okay, that you have an opportunity in the next trade to have a big enough move. So the higher volatility is not only the fear index, but the higher volatility creates more opportunities for traders to make recoveries instead of those grinding markets. So when I say to you, we're going to see some vicious rallies, and that is the key to understanding that we are definitely going into, well, we already are in, but in a bear market. Because when you get bear markets create the most vicious rallies you can look for. Those rallies look so good, you sit back and wonder, how can I not be participating in this rally? Okay. Those are the rallies you want to sell. That is, those rallies are built on either a bunch of bottom pickers and then short covering at the same time, which create those massive spikes higher. And of course, they invariably fail, which we've seen for the last few weeks. These big rallies continue to fail. But now the banks are whining again that this volatility is not helping their trading. That's the biggest crock ever, okay? Because if they're truly trading, they're loving this volatility, and I think this is, of course, is just another excuse. Again, one of the things we warn here often is that when you hear something from one of these big banks or from one of these big firms that tells you one thing, you can almost bet that they're doing the opposite themselves. That is just the classic spoofing. That's the classic way that we've seen forever. As everybody was calling for $80 oil, or $90 oil, or $100 oil, that you'll find out that when they open up their books that they were short oil, because that was the right side to be on. But the banks are complaining about the volatility. But in the meantime, with all the volatility and all their shrying and complaining, okay, they're now, if you take a look at the top 30 who announced their expectations for 2019, not one has this market going lower. Not one says that we're going to have a down year next year. Now, I'm going to predict that at least the first half of the year is going to be very down. Okay, I'm going to predict that we're going to have a bad year next year. I'm going to say that, again, now remember, okay, that doesn't mean you run and duck and cover. It means that the markets themselves look to be on the ropes. However, you will know that there will be certain things that will be bottoming long before the markets actually find their bottom. I mean, but I do think, and I am looking for a significant haircut to this market next year. Again, you've seen a lot of things going on that would tell you that there's a lot more fear out there than we're looking at. And of course, we're only just in the beginning here of what's going to happen. And I don't think that the Fed is going to control interest rates. I do think they're going to get away from them. Now, again, I am a believer that the rate should be higher to begin with. So that is something that is an issue. But you should not be fazed by this big sell-off. I believe that this was warranted. I believe that this is what we have laid out. This is what we've talked about for quite a while. I think that you're starting to see the tech wreck, which continues to fall. Now, again, you can hear all of these wonderful metrics from all these geniuses out there that tell you that, well, you know, we're only at 14 times earnings or a 13 PE. Remember one thing, okay? Markets themselves don't make mistakes, okay? The markets are just interpreting the amount of money flowing in and out of them, okay? PE ratios is an old wives' tale that does not always apply, okay? So just because ABC company is at a 5 PE doesn't mean that 5 is cheap, because the industry standard for that particular company could be 3. So 5 could be high. So again, I think we get far too much involved in what numbers are when the numbers in reality mean nothing. And anybody who tries to convince you differently, just tell them to take a look at the footprint and the chart of the market, because that is really what it comes down to. That's why we always recommend being hedged in this market, because the people that have hedged with me, we're cheering this down move because we're able to benefit and buy more stock as the markets are going down. We are not losing 20%, which the market is now down. We are not losing hardly anything, and we are, in the meantime, using outside capital without having to borrow it to buy more stock. So again, so if you believe in the theory that the markets go up 8% year over year, which they have done in their history, then you would be embracing this sell-off, not being afraid of it. But again, I go back to the recommendations of the big firms, and they're all telling you, and one guy's calling for 3,500 S&P next year, one's calling for 33, 29, 3,000. It may get there. Listen, I will never say with 100% certainty that they will not get there, but I would and will be betting against it, because I think they're, as I say, full of crap. In the meantime, this is Bubba's Bottom Line. I am Todd Bubba Horwitz. We're going to step out here for a break, and we'll be back with more of Bubba's Bottom Line after the break. Hey, everybody. If you want to get the free book from my friend Adam Baratta, Gold is a Better Way, you are welcome to do so. All you have to do is go to bubbatrading.com/gold, and you can get a free book from my friend Adam, Gold is a Better Way. And of course, if you'd like to help us with our high school program, highschoolinvesting.com, you can help us by going to Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you. And of course, we've been talking about a lot of the things that are going on. And, I think one of the big mistakes, now and if you don't know, it doesn't matter. I will make it clear now. I am a supporter of President Trump. I have been, did predict him a year before. In 2015, I predicted he'd be the next president. But in the meantime, that's not the point here. The point is here now. I think he's making a dramatic error. Now, we know that many presidents have been very critical of the Federal Reserve, which is fine. I'm critical of them every day because I don't think they do a very good job. And I think that they're so far passé. And of course, I think that basically they're continuing to chop down the middle class. But at the end of the day, just like the president's in office, and that I believe that no matter who's in office, you should support the president. And I think that President Trump appointed Chair Powell. And, when the markets are going up, he was very happy. Well, now that Chair Powell is doing what he thinks is his job, and again, if we had just the free markets working, nothing would matter. But I do not believe that we should be worrying about firing Chair Powell. I think we should be worried about taking care of everything else. Okay. And again, this is not a new event. It's happened many, many times in history. Presidents are very critical of the Fed because obviously the markets are very sensitive. But doesn't that ring to you a problem the market should not be so sensitive to the Fed. We should be more concerned about other things. Whether or not the Fed is manipulating the market in a direction is not one of them. Okay, so again, I think that he's making a mistake here. I think we are in a bear market. I think we are going a lot lower, and I think that one of the things you want to look at is take a look at the indexes. Okay, now first of all, the Dow has been the stronger index right now. So what that tells you, with the Dow being the stronger index, is that the markets are overall weak because the Dow is filled with more of the safety stocks and whatever. Now again, I warn all of you that you should be hedged. I tell you that you cannot pick the right sector, the risk on, risk off trade. But of course, your advisors and brokers will be telling you, well, you need to switch to here because, of course, that generates commission. All right. I'm telling you right now, if you have a good, solid company that you believe in and you're not hedged, I would not be trying to catch the next one. I would personally stay put, because again, that's if you have a good company that is still strong. Look, we're going to go through ebbs and flows as you're watching what's happening right now with Berkshire Hathaway. I mean, you can't get much better. Even though I'm not a fan of Warren Buffett and Berkshire, I can certainly respect the work that they do. And I would say that, again, if you're in good, solid, strong companies, then let them trade, they'll come back. I mean, that's really what it is. But the truth of the fact of the matter is you should be hedged, but that's the story for another day. But in the meantime, so we're seeing dramatic falls in markets. We violated a lot of levels. I would be concerned about what's going to happen tomorrow. However, again, I'm not trying to create fear. I'm certainly expecting a very large dead cat bounce. When I say a very large bounce, it would not surprise me at all to see these markets rally 6, 7, 8, 900, 1,000 points in one day, because that's what happens when you get to these vicious parts of the markets. So again, I am not telling you to get long these markets. If you're a trader, I would be looking for a shot to take a stab, as we talked about on Thursday and Friday. And I was wrong, but again, that was what I was looking for, is I would look for an opportunity to see a quick bounce. But I think there's dramatic room. And if you're looking, I think you sell into these rallies when they get back to some resistance levels. In the meantime, the Russell is getting absolutely ripped and clobbered. It basically is got trashed and looks like it's headed significantly lower. Okay. Again, I would expect, I'm expecting a 10 to 20% sell-off in the next year to continue to add on to what we've already got, if not more. I think this continues to get extremely ugly. I think you're going to see some dramatic changes. But in the meantime, as we have talked about, oil continues to get pounded. And again, we have the experts telling us that, well, oil should be going higher. It's not good for the economy. And I just asked the question. We were very prosperous when we didn't produce our own oil. We were very prosperous when oil was at $12 a barrel. Now, the only thing I can say here is that the rig counts are rising, which means that the frackers can make more money. So it doesn't appear that they're having much issue with what's going on in these markets. Okay. Now again, when they stop putting rigs out and they start cutting back, then you know that they've reached a point where they can no longer make money. Okay. But you can continue to see that oil has basically found no bottom. Now I would take a look at it closed around 45. I would expect a bounce. I think you'll probably see a bounce up to 50 before it falls back. And I do think the high 30s have now come into play. The grain markets had a rough week last week. Not horrible, but not healthy. I mean, I think the sell-off was healthy, but obviously if you're an owner, you didn't feel very good about it. I think you want to watch the grains. I think now that we've seen and these markets look like they're going to start to follow through, I think the money starts to flow into the ag space. And again, corn looks the best right now, and I think 370 is a great level. Wheat, we bought some wheat on Friday. I think that you can be a buyer at 510. As long as it stays above 5 March, you're in good shape. And I think when you go to March soybeans, okay, I think that, we're looking at, the $9 level, $8.95, somewhere around there, should continue to hold. I think that, again, the overall views is I think we're going a lot higher. I think that this has nothing to do with the China trade story. I think this is just simply there's an oversupply. And of course, if we had 100% free markets across everything, then the supply-demand curve would tell us exactly. but I think we just have an oversupply. Bumper to bumper crops back to back is really just a reason. The meats look pretty solid. Hogs are at a very key level as they came down to just broke below 62 on February hogs. Feeders look okay. They held at 142, 143 and looked like they want to take out the 150 on the top side. Fats look the best. They're now making an ascending pattern, looking like they're trying to break even higher. So again, I think the meats look very good. We had a report last week, which was basically neutral, but again, I don't really care about the reports. To me, they mean nothing. Gold looks terrific. Put up 6 months highs, and I think you want to watch up for 1275. But I think now, first quarter, we probably see into the 1300 level in gold as it continues to push its way higher. And again, everybody keeps worrying about it. Every time it sells off, everybody's worried. Well, we've come from 1180, actually an 1167 overnight low. Okay, we've rallied $100. Okay, so again, there always is going to be a little selling. The healthiest thing for a strong market is to see a little bit of a pullback. There's no reason to expect that the markets are going to go straight up, and you really don't want them to. Remember, in any market, like bull markets and the equities, for all this time, the markets have been grinding higher and torturing the shorts. Okay, that's a true bull market. Markets that grind are true markets. Markets that fluctuate with volatility are not. So we like the action in gold. We like the action in the US dollar because I think they're both going higher. Now that's obviously something weird, right? Higher dollar, higher grains, higher gold. Okay. But again, I think that we get too fixed on the relationship between one commodity to another, okay? And then we try to think that always works. Well, they do work, but there's a right and a fair value number. And the fair value, I believe, gold can support higher prices even with a stronger dollar. And I think the grains are as well. So I think we make too big of an ordeal about that, okay? So I think that is what you want to look at. I think the bond market finally had a blow-off top, and certainly the 30-year bonds. They had a big blow-off on Thursday, actually Wednesday, Thursday, and a little bit Friday, and then they fell apart. And both Thursday and Friday, they closed lower on the day after being higher. To me, that means they're going significantly lower now. And of course, we're short bonds, and we'll continue to look to sell. And I think the 10-year is starting to indicate that it's also starting to head lower. So that brings things to us to believe that the interest rates are going to rise as well. And I think that this last little bit of fall in rates because of the flight to quality of people being afraid and taking their money into treasuries. The cryptos look like they may have made a turn. Finally, we've got Bitcoin back over 4,000. We've got others starting to move. And as we've said all along, I believe that they have found a bottom. I believe they're going higher. And I know there's a lot of schools of thought out there. And certainly, I'm not an economist nor an expert on this subject. But based on markets, based on how they've traded, I do believe they've most likely found a bottom. And again, I always warn you and tell you almost every week that if you're going to invest in that market, just be prepared. Whatever you're going to invest, you could lose it all. Okay? But I think what really goes on underneath the surface is a lot of manipulation, because I think a lot of the big banks are involved here as well. And I think that they've been trying to figure out a way. And of course, you've got the Fed trying to stifle it because they can't figure out how to get their cut. So I think I would continue to watch and take a look at that. In the meantime, we're going to step out here for our final break and come back with, of course, my commentary. This is Bubba's Bottom Line. Todd Bob Horwitz will be right back. Hey, everybody. Make sure if you want to check out our high school program, highschoolinvesting.com. You can help us out at Patreon, patreon.com/Bubba Trading. And of course, if you want to get Gold is a Better Way, a free book from my friend Adam Barata from Advantage Gold, you can get that at BubbaTrading.com/gold. Now let's get back to Bubba's Bottom Line and my commentary. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you, and each and every week I get to give you my commentary, and this is going to be a dual commentary, because the first one is I have to ask you, okay, you internet trolls out there, don't you have a life? What is wrong with you? Don't you have something else to do? I get so many emails of people that are complaining and whining about everything and whatever it happens to be, and they are called in this business internet trolls that have no life and nothing else to do. And don't you have something other to do than just troll websites and make nasty comments about things that you have no idea about? To me, I don't understand why somebody would waste their time, okay, trying to troll sites all the time. But I guess that's what we've come to with all of these social media websites, and with a lack of any real interest in life, other than trying to criticize other people that try to do things. And I think that, to me, it would be nice to see some of these people get a life versus just trolling the internet. Again, I don't understand the whole process of what it makes you feel like to be a troll. But stay off my site, okay? I don't really want to hear from you. I have no interest in listening to you, and I don't think anybody else wants to read your ridiculous comments. So to me, you internet trolls should get a life and get the hell off the internet. But of course, that will never happen, and I'm sure there'll be a lot more after this. But again, I think that it's a waste of time. I don't read them. In fact, somebody asked me the other day about this, and said, how about all those comments? I said, the truth of the matter is, I don't even look at them, because why would I waste my valuable time, even 5 seconds of it, to look at something that is totally ridiculous and ignorant, that has no meaning to what I even care about in life? Okay, so you internet trolls need to get a life. Maybe that could be your New Year's resolution, is to start over and do something good for yourselves. In the meantime, let's end this on a happy note. And of course, it is Christmas, and for the year, I thank everybody for being a part of Bubba's Bottom Line. I thank you for watching it. I thank you for your comments. I think I get a lot of good comments, a lot of nice comments, and I want to wish everybody a very, very Merry Christmas. Again, Christmas is a great time of year, and we should all at least be able to be happy through the Christmas season. And I wish all of you a very Merry Christmas and a happy, healthy New Year. Let's make it prosperous. Let's continue to keep the momentum going, and what we've done with Bubba's Bottom Line, with everything else. But to everybody else, to everybody out there, Merry Christmas. I thank you so much for being a part of Bubba's Bottom Line. And we will see you actually tomorrow with Bubba's. There will be an update on Christmas Eve, and we'll see you next week with Bubba's Bottom Line. Merry Christmas, everybody. Thank you so much. We'll see you later. Bubba's Bottom Line. Have a great day.